The top coal miners on the ASX are up between 10 and 50% over the last month, and this is off the back of broker upgrades pushing the price targets up because the coal price itself has moved 10% in the month and 30% over the last quarter. We're looking at the top 6 coal miners on the ASX because this is final market points where we connect the leading market themes and top performing companies for better trading. You can like the video to support the channel, click subscribe for updates, and comment below to let us know which coal miners you're trading. Now, when we look at any commodity or coal mining or mining company on the ASX, we want to have a look at how the commodity itself has been trading, because that sets the context for what the rest of the market's been doing or what the whole group's been doing. You can see on the left-hand side, that chart is the coal price over the last 12 months, and there's been a steady rise from April, May, and June. And what we do see is that the coal price here on the table is up 10% over the last month. For context, the ASX top 200 is up 2.3% and iron ore is up 3.5%. Now, what we want to do is also understand how that coal price has been moving internationally. So we do know that thermal price of thermal coal is up 19% for the quarter, and met coal is up 8%. Now, the June quarter, thermal coal prices averaged about $107 US a tonne. That's up 19% from the prior quarter, and spot prices are now above $130 a tonne. The June quarter hard coking coal prices averaged $138 a tonne. That's up 8% on the prior quarter. Spot prices are now about $184 US a tonne. And then spot prices for both thermal and met coal are also significantly higher than the outlook for many brokers had. They updated at the start of June. So the market consensus in the last survey as well being throughout the last week of June. When we have a look at the seaborne trade versus China's domestic coal, China being the largest market for it, seaborne met coal coming out of Queensland is still trading at significant discount to China's domestic market. So both prices are higher, there is divergence there. We also see seaborne thermal coal and China's domestic prices are trading near parity. So China's domestic thermal coal prices have moderated recently, and that's bringing them to parity. When we look at the steel prices versus raw materials, we can see that there's been strong record steel prices that have supported the steel raw materials, being iron ore and hard coking coal. However, the raw material input costs as a percentage of steel prices are not remarkable by historical standards. They seem to be absorbing it. So we're really seeing that rebar, which is used in a lot of reinforcement. So we see that's in concrete reinforcing and beams. And we also see that has been reflecting the coal prices or the underlying commodity prices or the input movements. So too has hot rolled coil. So that's really the flat steel product that you see as a key ingredient for steel cladding, automotive manufacturing, and white goods. That's what we're seeing for the commodity itself. And you do see that in the price chart for coal moving up and the steel prices reflecting that too. Now we jump over to have a look and see what the top performing companies have done on the ASX. Number 6, we've got Whitehaven Coal up 15.9%. Having a look at the chart there, you can see how that's performed coming out of those lows, a very strong push up, good strong move indeed. And what we do know is Whitehaven has been one of the best performing and one of the most popular trading companies for coal on the ASX for a very long time. So Whitehaven are known in Australia for the development and operation of their coal mines on the east coast, New South Wales and Queensland, and that Narrabri project that is consistently seen as being a proxy for the rest of the coal markets. Then we move up to have a look at number 5, which is Coronado Coal. So another company, these two companies have seen brokers push up their price targets. Coronado's up 18% over the last month, and we do see that price chart being a similar sort of movement to Whitehaven with the timing of when it's been moving up. And we do know from how we see Coronado being described, they are a producer, marketer, and exporter of a full range of premium quality met coals. That's coming from their portfolio of operating mines and development projects in Queensland, Australia, and Virginia in West Virginia and Pennsylvania in the United States. That's their projects for Coronado Coal. Then we move up to have a look at the 4th position. AHQ is a ticker, Allegiance Coal, and we see the price chart on the right-hand side there. So their focus is their Dartbook project. And what we can see, just have a look at their project, the advanced in production of producing steelmaking coal projects in countries with low political risk. So what they're talking about here is North America. That's being British Columbia in Canada, and then the New Elk mine, which is Las Vegas county, in southeast Colorado, which is bordering that northeast New Mexico. And you can see that project there in the big red dot. That's the New Elk project that they have, and then also the Tennis project, which is based in British Columbia in Canada. That's ASX Coal up 23% over the last month. Then we go to Auspaccoal, so AQC. Now, Auspaccoal, they're up 36% over the last month, and you can see on the chart, far less liquid company. So their focus is on the Dartbrook project. This is based in the Hunter Valley, New South Wales. So it's located near that renowned coal region of the Hunter Valley and that contentious port. We have seen Chinese ownership and a lot of media headlines recently about how that is a really monopolistic infrastructure project and falling out of the ACCC's scope in 2018 and being trying. Many locals and those concerned about how China's playing in this coal environment and the infrastructure ports of Australia, trying to see that pulled back into the ACCC because the pricing competition is really quite a problem in that area, and this is probably getting it out, which Dartbrook are exposed to, or the Dartbrook project, because that is the Hunter Valley. Their project is 4 kilometres west of Aberdeen and then 10 kilometres north of Muswellbrook. So that Dartbrook site has access to that world-class infrastructure, skilled workforce, which Newcastle is well known for in that area for coal mining, and supporting industries around the area, utilising the major mining companies, which BHP was a part of many years ago, in that region to serve key customers Asia through the port of Newcastle, which is the largest in Australia for getting coal out to market. That Dartbrook coal handling and preparation plant has been maintained in good condition, so they describe, since Dartbrook was placed on a care and maintenance basis back in 2007, when we entered the GFC around that time. Now we have a look at Bathurst Resources, BRL, not VRL, BRL, which is not to be confused with Bathurst in New South Wales, because the project is mostly focused in New Zealand. You can see on the chart here, big flick up from 30 cents to 45 cents, but has been a very strong runner previously. So you do want to have a look at the overview for Bathurst Resources, because they are New Zealand's largest specialty coal company. Now, when we look at their projects on the South Island, we can see Canterbury Coal, which is Christchurch. That is 100% owned. They've got Stockton, which is north of Westport, 65% owned via BT Mining. And then Takima 2, north of Invercargill, that's 100% owned by Bathurst Resources. They also operate Minervini and Rotorua in the Waitaki region of the North Island, and they're 65% owned by BT Mining. They've also got a recent acquisition for their joint venture project with VP Mining, which they own a 65% equity stake, and they're looking to be explorer of high quality coal and steel projects, but also primarily focused in Japan, India, and Asia. So that does broaden the scope from just being a New Zealand-based coal miner to broadening the horizons. Now we have a look at the top performing one, which is a very low liquidity company. So look at Austchina Holdings. You can see on the chart that has had an explosive movement back in February, March, and then once again recently in June, July, where we're starting now to see that rapid movement to put on 53% over the last month. This company does develop early stage production projects, being exploration permits for coal in Ramoga, Stewart and Bowen basins, all in Queensland, and then also the biogas avenues that they're looking at. What we do want to see is broaden this table out to have a look at how they've performed over the last quarter. And you can see that the best performers are up 50%, ASX Coal. The coal price itself has outrun many of these coal mining companies, 30%, iron ore's from 25%, Auspaccoal 25%, Whitehaven Coal 12%, Bathurst Resources 10%, and then the ASX 6.85%. Broadening that out once more to have a look over the rolling 12 months, 138% from Austchina Holdings. Coal, the price of the commodity itself, 86%, iron ore 75%. These two commodities have outperformed these proxies to the coal market. Allegiance 63%, Auspaccoal 62%, Whitehaven 30%, and the S&P 200, the ASX, just under 21% over the month. They're the top 6 coal miners on the ASX. Again, like the video to support the channel, subscribe for updates, and comment below to let us know which coal mining companies you're trading.